Hello traders, and welcome to another video review. Today is Monday, the last day of the September 2024. The end of the month will bring some very interesting market behavior. So let's dig into the economic calendar first, and then of course to the charts. So let's start. During the Asian session, we got some data from Japan, New Zealand, and China. Japan industrial production is worse than expected, minus 3.3%. Forecast was minus 0.5%, way below 3.1% last time. So industrial production deteriorates significantly, but the retail sales jump. They jumped from 2.7 to 2.8, beating the expectations of 2.6%. ANZ business confidence jumps from 50.6 to 60.9 in New Zealand, and in Australia private sector credit is in line with expectations of 0.5%. Bunch of data from China. Manufacturing PMI beats the expectations of 49.4 with the actual number of 49.8, and non-manufacturing PMI at the level of 50, just slightly below the consensus of 50.4. Services PMI at 50.3, and CACs in manufacturing PMI at 49.3, slightly worse than 50.3 expected number. Business investment in UK at the level of 1.4%, beats the expectations of minus 0.1%, and is better than the previous number of 0.6%, and the GDP completely disappoints. 0.7% is worse than 0.9% expected number, and the previous number was 0.3%. So that's completely off the expectations. German retail sales are expected at 8 o'clock, together with the current account nationwide HPI, and the HPI data are already published. 0.7% beats the expectations of 0.3%, and it's better than the previous number of minus 0.2%. So nationwide HPI better than expected. Coffee leading indicators from the Switzerland are scheduled for release at 9 o'clock. Italian CPI is scheduled for release at 11 o'clock, and then we enter the New York session. German CPI is one of the most important events of today, is scheduled for release at 4 o'clock. At 2 o'clock, and the market participants expect an increase from minus 0.1% to 0.1%. At 10 to 3, FOMC member Bowman will give a speech. Then at 3 o'clock, ECB President Christine Lagarde to give a speech, and at 4:45, Chicago PMI data from the US are scheduled for release. 5 to 8 o'clock, Fed Chair Jerome Powell will give a speech as well. And as we narrow the day, we got two more events from the New Zealand. Business confidence is scheduled for release at 11 o'clock, and 45 minutes later building consents are scheduled for release as well. So pretty busy day as the end of the month. Let's start with the data from the Eurozone. We are going to start with Euro-Dollar because it should be affected, and then maybe we'll jump to yen-related pairs. Euro-Dollar for our chart still narrowing this trend line. As you can see, the bulls are still having a problem to break above the last high at 1.1214. This zone here that you can see, the red zone or pink zone is the supply zone, and it's been tested many times, but the bears are pushing the prices lower, but the bulls are buying the dips all the time, all the way up, which is why this trend line provides very nice technical supports. So for now, as you can see, the momentum is not going up that much, but it still bounces from the level of 50, or from the level of 47, or even from the level of 40 points. We got several bearish engulfing patterns on the 4-hour chart here, but all of the dips are being bought, and now we are waiting for this market to resolve itself. It doesn't actually look too much impulsive for me anymore, so maybe this 1 to 2 Elliott wave count is not really that great because of this part of the cycle. But if there is an impulsive breakout to the upside, and there needs to be above 1.1214, because the bulls needs to go higher if they want to keep this pace of buying the dips, then of course that situation might be a little bit changed in favor of the impulsive wave count to the upside on the euro dollar. Only a sustained breakout below 1.1122 and then 1.1082 might change the outlook for more bearish, with the target at the first at this slight demand zone, and even the targeting even the target of the 1.1044 might be the next one to test, because it's a low for the wave 4. So right now we're waiting for a breakout to the upside according to our plan. US dollar to the Japanese yen is showing us big reversal pattern. This reversal pattern breaks all of the technical support levels. Let me just place the level of 147.22 as the key technical resistance. All of these levels are right now not that much important, because the market broke below it without any problems. 146.50 was the high, and then big movement to the downside, big engulfing pattern here was made. Now we made even a local low at 141.66, and we are moving towards the technical support at 140.30, and then swing low at 139.59. The momentum hit the extremely overbought conditions and then sharply reversed below the level of 50. Right now the lowest number was 36 points only. Bears are in charge of this market. They are pushing the market lower, they are making pressure on bulls, so we should see lower levels very, very soon on US dollar to the Japanese yen. Let's take a look at the British pound. Because of the recent data from the British economy, you can see that this market doesn't actually care about any sort of the bearish divergence. You can see this market has made another swing up, and then look at this. This swing here was made, okay, for the on the level of 1.3428, and then the movement was little bit subdued, but the momentum was way lower. So we might have some kind of a bearish engulfing, bearish divergence, of course. We will switch the level of 1.3339 for the technical support, and we will add this level here, the top 1.3433 as the technical resistance, and the momentum is closer to the level of 50 than to the 70, which is why I guess this is the bearish divergence right now on the top of this move, despite the fact that we broke out from this nice expanding wedge. And right now we are looking for the intraday technical support to be violated. 1.3359 is the next local technical support. If it's violated, then we will test these levels here, the local supports 1.3336, 1.3295, and last but not least 1.3267. So it looks like the market wants to go lower. Bearish divergence might be resolved very soon on the British pound to other versus the US dollar or cable. Let's just switch for another market because we need to take a look, of course, at the Bitcoin. So finally, Bitcoin broke above this supply zone, but it hit the extremely overbought conditions again. Made a local low at 66,446, then consolidated for the most of the weekend, and at the early morning of the early Monday morning, we can see weakness of the Bitcoin. Let me just focus on my chart for a second, because we need to extend this lower line here a little bit higher, so we can have it like something like that, yeah. And we are still trading inside of the channel, but the market is getting dangerously close to its lower line. Let me just move this demand zone. It's a key demand zone. As you can see, we've been testing this demand zone at least 5 times, so it's a strong demand zone. So it looks like the market wants to test it again, even despite even if it falls below or out of the channel, below the level of 50 on the RSI. Maybe even it might even go lower towards the extremely oversold conditions. But that should be somewhere around the demand zone, and then reverse higher. Of course, the whole movement here looks very impulsive, looks very strong. So as you can see, the major technical level here, which is 65,001, 65,084, has been violated significantly. Next target is 68,500 to be, and this level should be tested as soon as the corrective pullback is done, and then we should see the resumption of the uptrend. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.